Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your market wrap-up. This is the financial market wrap-up for the end of the month, July 31st, 2020. Well, what a month it has been, and what a week. Woof! Lots of volatility. We capped it off today with, of course, now TikTok, Microsoft of all companies, making a bid for them. I don't know if that was it. I would have thought Google or another company would have bid for them, but somebody's going to bid for them. I don't know that I like that bid, but I'll talk about that in my Spider ETF. In any case, you come back. What a day. You opened up near the highs of the day in the Dow, spent the day breaking. When that news broke, the markets, for whatever reason, is at unison. Be it the Nasdaq, the S&P, and the Dow came back. You never came back in the Russell. It's rotation time. The Russell had been better than the other indices this week. Now it's giving up at weekend as they come back on. Strong action in gold and silver. You've got to leave August gold now. Now it's delivery time, so it's time for you to move on to the Dece gold. You might want to do Dece gold, Dece silver ratios if you're going to watch that. Energy's a bit of a pop here today. Down in the nat gases, the storms that are coming in are not supposed to impact that, and they're already talking a bit cooler than normal August. I know in Chicago for July, I think we were the 4th warmest July of all time. June was the 6th warmest, so we are in a heat wave. We can't get palm trees yet, but we've been warm. Grain markets, nice action to the upside. So let's take a look. First thing we look at on these charts, remember when we go to these, this gives you an idea of what the weeklies are. I don't cover everything here. This is a modified version because now on my subscriber videos, I do weekend edition for them of all weekly charts on 40 different futures markets, a lot more studies. Just hone in, because I know a lot of you aren't in and out traders. You want to be more the longer term. Weekly charts might suit you. So as you look at the market, what's the one glaring thing I see? If I back off a little bit, let's get rid of this. This is the market as of June 30th. This is a monthly chart, remember. 32.31 had been the high close. You blast through it. So monthly chart, up and gone. Vertical price rise. That's what you call this. So this market from that March low, vertical. It's never looked back. Amazing action. In April of this year, I said, you know, I'm beginning to suspect this could be another one of 2009 zones where the market bottomed. I didn't believe it, nor did many, and it just kept going for over a decade. Now, I'm not saying you're necessarily going to go for a decade. Who can make a prediction like that? But I recognized and I remembered what the pattern looked like, and I certainly applied it. When I look at the S&P right here on the weekly chart, we ended the correction right back in this zone. I think you'd agree with me. I'll leave that trend line on just so I'm just connecting points. You had lower highs, lower lows. If you take that out at any point, you're out of the correction. That doesn't mean you're necessarily going to run to the upside. It means you're out of the correction. And that's what happened. Now you start looking and you're going, okay, market's pulling back and forth, and this is where you're at. You have not gotten over the 33.81 level. On a weekly chart, that's what you have to get on a closing basis to say up and away. But you've done an important thing. From this March low, you got up, you had a pause, and now you're moving again. Take this low out again, and that low specifically on a closing basis of 30.07, and it could be problematic on the chart. Things would change on you. So that's the number I don't want to see taken out. What about as the market's moving up on this chart? Well, I think you can see it. And the question is, how long does it keep going, and is it able to make a run for this high or not? There's a gap in the chart here. Are we going to fill it? Probably. When you take a look at what the swing line looks like, and this is a study I wrote, it works on monthly charts, daily charts, 15-minute charts, doesn't matter what they are. The concept is you're looking to see do you have a trend, and if you do, what's the risk associated with the trend before that is broken. On this chart, we have a pattern of higher lows, higher highs. That's the definition of an uptrend. You'd have to take out 29.8350 on the current pattern to break that. Pretty far away. I'm not looking for that. You'd have to have some piece of news I have no idea about. When you look at where support is, the 18-day average has now gotten over that number. I always look for that. What else happened? If you and I come right back here, and this was July 17th, not history. The 18 is under the 100 on closing basis of a weekly chart, crosses over, and what happens? You're now ready, I think, to make a higher high than that. We'll see if I'm right or wrong. That's normally what occurs. When I look at Bollinger Bands, this is my target if that occurs, that higher high. 33.8875. You round it right to where the market is. But that would be the number that I'd be looking at that point in time. You don't have an outside week up, so just a nice trend and momentum still to the upside. On the slow stochastics on weekly charts, I don't look at overbought or oversold. I used to. And I found that it didn't work as well as just looking at it as one of three ways, in my opinion, this is. Overbought, not overbought, pointing up, pointing down, or neutral. That's all I care about. I'll let the chart do its thing. Do you use the weekly chart to trade off of? Some people do. I like to combine the two for those ideas. In the Nasdaq, momentum, as measured by the slow stochastic oscillator, still to the upside. Pattern, higher lows, and it's been this way for quite a while. Higher highs. If the market wants to keep the pattern going, it should not take out 10,301. Next target on the upside, if the market can make a run to the Bollinger Band, which it has not been able to do since the March break. Still hasn't done it. So I use the word if it can get there. Because it hasn't in a 6-month period, I question if it's going to. You got to look at some of the other numbers on the chart, but that would be 11,354. In the Dow, the trend, still momentum up, but weakening. That's how I'd look at it. Higher lows, higher highs. And what did this chart do this week? Went back to the 100-week moving average, and that's where the market's trying to find support. Now, if you take a look like this, here's the market collapse. We know that. Then it goes back to the 200-week moving average, trying to find its footing. Let's call it that way. The resistance could be either the 18-week, which it normally is, or the 100-week. The market comes up, starts challenging, and goes right through the 100-week. It didn't even pay attention to the 18-week. It just said, you're not important at all. Started fighting at that number, and as you can see, still fighting. Now, when you get over a number like a key moving average, it is not uncommon that on the way back, you say, okay, you were resistance, now you're support. And that seems to be what this market is doing. Should it give up more ground? Magically, I would look for the 18-week and the 200-week to come into play. Who's in control of the market? The bulls are at this point. In the Russell, market's having a hard time at the 100-week average. Respect that. The market has still got momentum up and trend up, but it's having a hard time here. And even if it punches through, I seriously doubt it's going to be able to stay over that upper Bollinger Band for any length. That number in the past has really capped this market. So as we're getting into the month of August, the dog days of summer, as you know, use a little caution in this particular one. Then we get to the bonds and the notes. Are you aware that in the 10-year note, you have an all-time low close on yields, 0.53, I think 0.533. Wow. Would you believe you're going to put your money to work for 10 years and get a 0.5 percentage point return? Riding the upper Bollinger Band on the 30-year, still strong, still acting good. 10-year note should be the resistance right here, finally back at 140.03. This is called a pipe. And what the market's done is it's decided that it's going to be capped in a tight range by the Bollinger Bands. Eventually it'll break out one way or the other. Right now all the bias is to the upside, momentum up, trend up, resistance, and swing line up. Okay, I see that. Dollar index broke out to the downside, a big week to the down, but it's the month that's important. This is the largest declining month in the dollar index I remember. I didn't go back to see if it's all-time record, but I don't remember one like this. Just a collapse. I hope you caught some of it. But interesting, you had a bounce in the market today, and the euro breaking out to the upside. I know my firm wrote me just Monday. And they had a big hedge they had to put on, and what numbers did I think the market was going to go to? I said 119, 120. So probably closer to 120. Bingo. Feel pretty good about it. I hope they send me something about that. But that's where you're at this point. And as you can see, momentum's still up, trend up. You're ahead of yourself. Do you ever buy over a Bollinger Band? Not if you've taken my charting course. If we come back here to let's go to the dollar. Do you sell under the Bollinger Band? No. 95% of the time you're going to be within those bands. I'll pay attention to them. You don't, I will. I want the other side of those bets because I like 95%. I want to beat a casino. I'll lose 5%. That's okay. In the Canadian dollar, you can see how the market's fighting. Now the 200-day average, where is that? I don't even see it on the chart, but the 100-day is right here in the upper Bollinger Band. Trend up, momentum up, everything's still bullish on this. As a group, currencies are running over the US dollar. Even the yen. I was so happy to see what the yen did this week. It came back and it finished at 94.59.5, just under the Bollinger Band. That just adds to the bullishness of this market. The strength is back down here. I think the long-term traders will be looking at that 18-week average of closes as their buy number. Momentum's starting to faint a little bit here. See how it's starting to flip on you? Watch what happens when we open on Sunday night to see if it stays like that. Bitcoin, you're up at a number where I think the pros came out of trades. Again, you get up to the upper number, what are the odds of staying over it? 5% of the time? If you look back here, I know, oh, it's going to go to the moon. And then you went there, oh, it's going to hell. Comes back up. Learn to play these numbers, very important. Brent versus WTI, Brent's getting some muscle under it. It's starting to give more than a little bit of a noise of a rally. Might be headed back to almost a 380 differential there. If you look at Brent on its own, trend is up, momentum up. You'd have to take out 40.06 on the weekly chart to break the trend. The daily chart is bearish. So these two are fighting each other right now in that correction zone. In the WTI, same thing. The daily chart looks bearish. This market's come up. Can you imagine? Just back in May, we had a $40 negative price. If you owned a tanker and you could have bought the oil, do you realize how much money you made? You went from negative 40 to plus 40. That's a lifetime trade. It's that simple. But you got to get rid of that and now look at what it is. On the weekly chart, you're friendly, not so on the daily. Rebob gasoline stepped out of its uptrend even on the weekly. So as we're coming into what I call the real heart of the driving season, have the refineries cranked up what they have to, could be the word, but you got a higher high and lower and low. The bias is up and momentum's up, but you are not trending. And even if you ran to the upside from here, it still wouldn't be an uptrend. You're going to end up with, no matter what you do, a higher high and a lower and low for at least a week or two. So something to pay good attention to. You know, in the mornings, I start you off at typically 5:40 in the morning with a video recording. I cover 40 charts. I wake up first thing 4:30, and I am a readaholic. And I'm reading everything I can, what's going on in Asia, all parts of Asia, Europe, economics are what I'm looking at, commodity-related news are what I'm looking at, and then the U.S. Before I go to bed, I already know all the reports that are coming out the next morning for the U.S. I write that all down and I start off each morning's video bringing you up to date with that information. Because fundamentals, you should have an idea. Sometimes you don't want to trade through them. Other times you do. Then I'm going to give you specifically, when we start opening up charts, the idea, I'm hoping to give you idea in your own confidence levels. I'm going to cover this whole sequence of markets in this way each and every time. The backgrounds are going to be black. I am not in those videos. You're going to be seeing more studies than you do in these. And the idea there, ideas. Some will work, some won't work. I'm not trying to manage your money. I'm trying to be a mentor, your moose, if you will. I wish I looked like Sharon Stone or some of those people, I guess, but the way it is, as a man, of course. So as you go through that, that's the idea. Now, I combine it also with something brand new, two elements. I'm going to record, maybe right after this, my weekend edition with 40 charts of what I see in the longer term charts for my traders that are my subscribers in both my Spider and Futures video. Starting a week from this Sunday, I'm going to have webinars. There'll probably be 2 a month. And you're invited to come in. It's included in the subscription price. For those of you that are not paying subscribers, you will pay at the door if you want to come in. At least an hour-long webinar is what they typically run. They might even be more, because I could have some wine as I'm talking to you, and we can go through chart upon chart. And remember, we're going to cover stocks, spiders, ETFs, whatever your question is, we'll bring up. So it's going to be a heck of a lot of fun. And unlike Kramer, it won't be a fire round. It should just be a lot of neat talk where we try to teach. How do you get this? You got to buy into it, no question. $7.95. What's a Starbucks Grand Latte cost? Not 30 days of what I'm giving you for just about that price. Go to www.iraepstein.com under the word research. You can read all about it. We have combo packages if you like spiders, ETFs with this. I think you'll find it interesting, to say the least. I'm Ira. You have a good day. I will see you all come Monday.